So then it sounds like to me, Ben, that the best way that I can invest in companies or mutual funds that are socially responsible and sustainable is to hire someone who can investigate that and really help me see without me having to have another job of digging into all the data to know.
Be the change you want to see. Make a difference by giving your money a purpose, a mission to do good. Welcome to Money with Mission, where we show you how to create passive income so that you have options for how to work and how to live your life while leaving a legacy of positive social impact.
Welcome back to Money with Mission. Today I have Ben and Kyle from Till Investments. Today we're going to talk about ESG investing, and we're going to explain what that is, and sustainable investing, and kind of get into the social impact of investing. Welcome to the show, Ben and Kyle. Thank you.
Thanks. Great to be here.
It's good. Just transparency, you guys, you know how I am. We just met just a few minutes ago, and I had been reviewing them and knew them online, but not in person. So I'm really excited to have this conversation. Okay, either one want to start with your money story. How did you grow up with money? Did you change your money story at any time? People like to know how we got to where we are. Whoever wants to start.
Go ahead.
I'll jump in. So you asked, how did I grow up with money? And the answer to that is I did not grow up with money. And in fact, the amount of money you have is probably less important when you're a kid than the attitude toward money that you grow up with.
Yes.
So, I definitely grew up in a house where money was a terrifying thing to talk about. It was something that people never mentioned. So as I went through my, as I became an adult, as I got education and whatnot, I just wanted to understand what money was because I didn't really, understand it. And I was young and I could sort of see that it was central to the way things happened in the world, but I didn't really get it. So, and I was actually a poli-sci major. So, it wasn't something that I really wanted to learn about formally in school. But after I graduated, I had the opportunity to work at Morningstar. It was Morningstar's 40th employee meeting. And it was like getting a real world education in the land of money. And because I'm a writer and because I'm very much interested in education and sharing information, I kind of turned that base of knowledge into sort of a long-term business in explaining financial concepts to people. And so that's where I've been for years. I have a different company that is sort of works with investment managers to explain and report on the way investments work. And that's been going for the last 20 years.
Awesome. A couple questions and then we'll give you and Ben. So I don't think I really started thinking about money until after medical school, actually. So what made you think that you didn't understand money or think about money in any way when you started thinking about it?
Yeah, it was going to college, really, because I didn't have any money. There was no family money, or my parents didn't save any money for me to go to college. I knew that going to college was kind of the door to a more potential future. So I wanted to go to college, but there was no money to do it. So, I worked hard to get scholarships and all that kind of stuff, but I had to work a lot. I had to work the 4 different jobs in the summer and the 2 different jobs while doing the full-time class load or whatever. I hustled my butt pretty good, but, it was hugely expensive. I definitely had those periods where it was like, okay, well, am I going to go with my friends to 7-Eleven and get an ice cream, or am I going to buy toothpaste for the next 2 weeks? I have a lot of those moments, So to me, it was just, I want to understand this better, not so that I can become rich, because I'm not terribly interested in that, but so that I can achieve some financial stability and not spend my entire future being anxious over small decisions like this. And that's really informed me for a long time.
Got it. So actually, it sounds like wanting to not worry about it, not worry about, am I going to be able to, if I want to have ice cream, I want to have ice cream. I don't want to have to think that through. And probably like me, you see people who seem to be able to do all these things and have the money that they want, but they didn't seem smarter than me or anything. And they just seem to have an understanding that I didn't have. So, okay, I got it.
Yeah.
Thank you. Ben, it's going to be exciting to hear about a guy and how he got his money story.
No pressure, right? So I grew up in what I would call a comfortably upper middle class environment. So very different from Kyle's background. We had money. We certainly did not flaunt money, but we definitely lived comfortably, vacations, the whole bit. But I was also very next to, upper class, right? So, I wasn't the guy, I don't know, taking a Hawaii vacation, but the friend of my friend was the kid who got the BMW when he was 16, right? And so for me, my relationship with money has always been, growing up and establishing myself has been, well, but I need to adult here. I need to be the earner. I need to be the one taking responsibility, right? And not that, your self-worth is directly tied to the amount of money you make, not by any means, but it is a mark of, what, I need to go out and show that I can provide for myself and provide for my family and not lean on other resources that are there. And even beyond that, when I do so, take that money and put it to use in a way that helps lift others, right? Rather than, sorry to my son who will be 16 in a couple of years, you will not be getting a BMW when you turn 16. Or will you be listening to this podcast? I'm sure, but okay. But instead to use that money more thoughtfully and with more value in mind. So yes, that's what I would say is my relationship with money.
Okay. So interesting. I know, Ben, also that you're a professor and you teach social entrepreneurship and sustainable investing. So I'm going to jump right into that.
Go for it.
What is sustainable investing?
Sustainable investing. So you can get a lot of different answers to that question. But to me, the simplest way to explain it is that you are investing in a way that will generate returns while also interacting well with the rest of the world, right? That you are not necessarily extracting those returns from others, but you are generating those returns by adding value to the world around you.
So got it. So the word sustainable in that is, what about that is sustainable? Let me ask that question.
Well, because if what you are doing is extracting value from others, that is not a good long-term plan, right? So, for example, the cigarette industry, right? You were extracting money from people, but you were also doing a lot of damage to them, right? And in the end, that damage caught up to you and society decided you were not worth what you were worth anymore and your stock value plummeted, right? So sustainable in terms of interacting well with the world around you, and sustainable as in being a good long-term business plan and business investment, it's the same thing, right? It's both meanings of sustainable working in harmony together.
Got it. Thank you for the cigarette example.
Mm-hmm.
To bring it in. Let me just say what I think I understand. So sustainable, it comes both ways. It's the company being sustainable that you're investing in,
Mm-hmm.
and that company is sustainable, then your investment in that company is sustainable long term because that company is going to be around. There's so many companies we could talk about that are extracting what's building. It's having
Mm-hmm.
a positive impact on the world or the industry that it's in. Yes,
that's exactly right. That's exactly. And, when you look at the studies that have been looking at sustainable investing, what you'll find is that the longer the time horizon is that you look at, the better these sustainable companies do, right? If you are investing for the long term, and most of us say that we are investing for the long term, this is not a game for day traders, right? This is a long-term investment. It is a good idea to consider sustainability when you are making that long-term investment.
And long term, this is a question I ask. I have patients who say it's been going on for a long time. I'm like, well, how long is that? How long is long term?
Longer the better, right? I mean, it depends on who you are as a person, right? I am years old. And so, long term for me is a certain number. And, but if you're just starting out in your career, right, or you're in your early, 20s or 30s or whatever it is, long term is probably a good 30, 40, 50 years, right?
One of the things I like to say is that everybody is a long-term investor. For most people, the most prominent investment that they will have is for retirement. And even if you are only 2 years from retirement, your investments for retirement need to be they need to be invested to last for 20 to 30 years, right? So everybody is a long-term investor eventually.
All right. Kyle, socially responsible investing and sustainable investing, are those the same thing?
Well, they are more or less the same thing. And kind of what you're touching on is that there's sort of a long history of sustainable investing or socially responsible investing. And there's been eras in the past. So at one point, I mean, this kind of investing goes back to the Quakers, back in historical times, who were very religiously motivated, very faith-based, oriented in the way that they wanted to use their money. Back in the 70s and 80s, the most common terminology was social responsibility, at least in the investment world, right? And then, but what distinguishes sustainable investing today from socially responsible investing ideas of the past is that there's more data now. So in the past, there was a lot of feeling, because a lot of people feel like intuitively that it doesn't make sense to put your money behind companies that are doing things that you don't approve of or that you wouldn't want to support with your dollars. But it was kind of just it was a lot of intuition. It was minimal information, right? Mm-hmm. Now there's a lot better data, and the data falls into 3 categories. Those categories are environmental, social, and governance, which is why people call this ESG investing. But it's really that the data is designed to highlight the kinds of problems that a company's decision-making is getting itself into, and that might make the company less sustainable over time.
Do all companies keep this data?
No, but all public companies are being asked pretty consistently now to provide this data in specific kind of frameworks. So if you're a private company, maybe nobody's asking you for this information, or if they are, you feel free to ignore them. But if you're a publicly investable company, if you want any kind of mutual fund company or large institutional investor to be investing in the stock of your company, you're likely to be getting a number of questionnaires to say, hey, can you fill out, this set of information, this set of data? And rating companies like MSCI and Morningstar, they're asking for this kind of data as well. And the data, there's different types of data that exist that didn't used to exist, like, carbon footprint is pretty well known, but there's a lot of different kinds of data that companies can report on that help to shape people's expectations about their sustainability.
You must have been reading my mind for the next question, because it was going to be about data. So what data are these companies having to put out, either both? We're not ignoring you, Ben, to explain how they are responsible, socially responsible, sustainable. Because the media tells us all about, we know what companies are doing good things, but if we dug in, would they really be doing good things? So how do you?
It's a really critically important question. And, there's an answer to your question if you want to dive into a lot of technical information about how investment professionals evaluate different kinds of data. But I think the real gist of your question is there might be a bit of a disconnect between what companies say in their marketing about how environmentally friendly that they are, and what's really true based on their corporate decision-making, right? So I think the good news is, like, one of the reasons that we support sustainable investing in general is that if you are investing your money in a retirement plan or anywhere else into a really proper, legitimate, sustainable investing strategy, whether that's an index fund or an ETF or some kind of sustainable focused fund, you are investing with investment professionals that are trained to look for the difference, right? They're trained to look for the right kind of data. So it's really hard for an individual to look at, I don't know, Exxon or BP or Microsoft and say, is the data they're producing legitimate? but it's not as hard for like an investment analyst at Domini, which is a specialty company that focuses on this stuff, to look at that data comparatively to everyone else in that industry and say, okay, this is good data. They're reporting in a transparent, legitimate way. This company over here is kind of blowing smoke.
Okay. So then it sounds like to me, Ben, that the best way that I can invest in companies or mutual funds that are socially responsible and sustainable is to hire someone who can investigate that and really help me see without me having to have another job of digging into all the data to know. Is that correct?
For 99% of the people, yeah, right? If you were one of these people who was like, I want to research this for the next 3 weeks of my life, right? By all means, go right ahead, have a great time. But for me, it's much easier to say, all right, what I really want to do is find a fund provider that I trust, right? That I believe in. And that's what I'm really going to use. If I can find the person whose methodology I trust and whose messaging I trust and whose analysis I trust, then I'm going to put my money with them and they are going to make those decisions for me, right? Because that's one decision you have to make. Then they'll make all the individual decisions about the different companies.
Got it. I want that person. How do I find them? And what questions do I need to be asking them to know that they are really doing that thing for me?
So we have a whole book coming out just about that question. So let me summarize it in 90 seconds or less for you. So, I mean, the first thing you want to do is, well, where's my money now, right? Am I with this fund company or that fund company? Because the easiest thing to do is see what they are offering in this space. The number of funds that have, sustainable labels on them or ESG labels on them has grown exponentially over the last couple of years. And so it is likely that there is something at arm's length that you can look at. Now, is that going to be a good fund? Not necessarily, right? And so the way what you want to do when you look at that fund is you want to say the two simple questions. Do they say what they do? And do they do what they say, right? Are they telling you what they mean by a sustainable fund? Are they telling you what it is that they use to decide whether or not a company is sustainable or not? And then are they showing you that they are actually using that methodology to analyze those funds, right? If they're not meeting those two simple questions, then, you talked about before we came on this idea of greenwashing. Well, that's where greenwashing comes in at the fund level, right? First, make sure they're being open and transparent with you about what they do. Then you can decide, well, is that what I want, right? And if it is, great. And if it's not, then you can, cast a wider net a little bit.
And let me just highlight that you do not need to be an expert. You do not need to be an investing expert to make these judgments. You genuinely do not. It is the fund company's responsibility to be clear with you and understandable to you about how they are, investing your money. If you read something, if you're looking at, I don't know, a Vanguard ESG index fund or, just to pull an example out of a hat, and you read, whatever like 3 paragraphs they have on the internet about that fund, and you don't get it or you don't feel like it's talking to things that matter to you, it's not for you. It's not for you. Perfectly fine. That's perfectly fine. One of the best indicators of quality in this world is transparency. So if you feel like you're getting a clear picture, that's a really good sign.
Okay. So what I'm hearing is that if I decide if I'm looking for a company or a fund manager that's going to help me invest in high or sustainable funds or companies, either one, and I go on their website and I read their verbiage and I'm like, what the heck are you talking about here? It's not because I'm dumb. It's because they're not being transparent and clear. And it's not that we should, just I say this to my patients, I should be able to explain it to you so you can understand it.
Exactly right. Exactly right.
Rocket science. Yes, I have a lot of knowledge about what I do as a physician, but I should be able to explain it to you so you get it.
That's a fantastic analogy, right? That is exactly what you're talking. You are on one side of that desk when you're in your office as a doctor. You're on the other side of the desk now as a consumer talking to these fund companies, right? And the thing is, you have to realize that for so many years, these companies have not had to explain this, right? They can say, oh, that's proprietary, right? Oh, we don't need to tell, we're not going to tell you how we make this. We're the smartest guys in the room and you guys just have to trust us, right? And that's okay when all you're thinking about is, well, what's that number of return at the end of the day? That's all that I really care about. If you want to believe you're the smartest guy in the room, that's great. Make sure that I get my returns. But now you're saying, well, I want to understand the values that you're bringing to this, how you consider sustainability. And often these fund managers are just not used to having to explain that sort of thing, right? And so it's something that I believe is going to get better over time, but you're exactly right. That your failure to understand is not because you are failing, it's because they are failing to explain it to you properly. And you deserve better than that.
Yes.
So, and just for simplicity's sake, Ben and I, as part of the book that we mentioned, we have a set of fund company profiles. So we went through the largest fund companies as well as a number of specialty fund companies. And we give you 3/4 of the page of very brief sort of analysis or explanation about what their approach is, how they go about it, and some, examples of funds that they offer.
Okay.
So that's definitely something. We also offer that on our website, but it's certainly something you can do on your own. But if you want a shortcut, we endeavored to provide one.
So that was going there next. Okay, so you guys, your company is Till Investments, or one of your companies is Till Investments.
Till Investors.
Our stores, not investments, because you said on your site we don't help you.
We're not selling you any investments.
Till Investors. What do you do? How can you help me? What do you do in the world?
Well,
Kyle, you want to take that?
I think the number one thing is that I think the simplest way to describe it is that we want to help people make their first sustainable investment. Because investing is something that you do over the course of your lifetime. And as you individually grow in terms of the resources that you have and the kinds of things you want to do with your money, you might get to a place where you can use money for real specific kinds of, like impact investments. There's a lot of different alternative opportunities out there. But before you go diving into, hey, I want to take $10,000 of my money and invest in this renewable tree organization that grows trees and sell them, which is great. It's a really great thing that these things are out there. Maybe it's not the first thing you should do, because it's hard to understand what are you getting and what are you committing and what is the risk of all that. That stuff is a little harder to understand. So I think it's a really good idea to start with. There's a lot of mutual funds and ETFs, hundreds of them, something like 500 to 600 of them that are available. Let's get a feel for how those work and what kind of strategies they use and how I feel about what I'm getting from this investment. And then we can build from there. But we want to give people at least the basic information to make that first investment. And then we also are doing some other stuff with institutions. Ben, you want to talk about that?
Yeah. So the other spot where we're really playing a role here is helping smaller foundations and nonprofits and other sort of mission-driven organizations with helping them align their investments with their values. Right. So, if you are an environmental organization and you have a bunch of employees and you have a 401k, well, let's help them, have an option in there where they can invest in a sustainable way. Or if you are a local nonprofit who's really focused on minorities or women or whatever it might be, right? There are investments out there that are women's leadership funds or NAACP funds or whatever it is, right? And, it's raising awareness and helping them sort of realize, oh yeah, this is something that we can do. And really, it's something that we should do because this is what our mission is. So that's the other area where we're working.
That's really interesting. So as an individual investor for my own 401k, for my own retirement, whatever I'm, investing for, I could invest in companies that, how you just said, maybe I didn't understand what you're saying about the social justice and women leadership. Is this a company that's doing this? Or
no. So for example, there is a fund out there. It's called, I'm not promoting this, right? But I believe it's the Pax Global Women's Elevate Fund, something similar to that. And their methodology is that they do the hard work to see which companies have strong women leadership, whether it's CEOs or boards of directors, or, have, good policies for women, or, pay equity, things like that. And they will invest more in those companies than others. And so if you are interested in investing in a way that isn't just give me the market money, but oh yeah, I kind of want to feel good about this, and this is something I care about, that's something you can do.
So just as a way of being clear, when it comes to retirement plans, like 401ks, you personally don't have a lot of options there. Yeah. Those choices are made by your employer. You can talk to your employer, and a lot of people increasingly are, especially millennials. Millennials really like to shake things up. So there's a lot of that going on where people are going to their HR people and saying, we don't want these generic index funds. We want to include some options that are like this. But if you are if you're saving money in an IRA or in a personal investment, you can pick anything, including exchange traded funds, which are mutual funds that are just sold on the stock exchange. And there's all kinds of options there. There's an NAACP sponsored fund, which is investment funds that is really focused on minority ownership. There are women-oriented funds. There are environment-specific funds. You really just need to pop the, into the search bar of Google, like environment-focused funds or social justice funds or what have you, and you'll get, you'll find out pretty quickly what options it might be.
Got it. Do most bigger companies that are in, I don't even know what you call them. My brain is like Fidelity or Vanguard or those kind of companies. Do they have the sustainable, at least a sustainable corner, or
all of them have at least something, and many of them beyond their own funds will provide you with access to other funds. So for example, Fidelity gives you access to most of these funds that we've been talking about today. Vanguard, slightly less so, but there are some. And, there's all sorts of different providers out there. It's just a matter of taking a look at, what's on the menu.
One thing we try to explain in the fund profiles about, like, if you're at one of the big companies, right, or real big providers, this is kind of what you're getting there. And, the important thing about those providers, the big companies, is that they're a little bit more hesitant to do the deep thematic funds because they're trying to appeal to everybody. Yeah. Right. So a lot of their focus is going to be, we want to eliminate companies in our portfolios that have these kind of risks. If you're Exxon and you are at risk of being sued for your terrible environmental practices, maybe we'll exclude you. So it's a little bit ESG light, a little bit. But again, that's not a bad starting place. If that's your first investment, that's okay. It gives you a different way of thinking about your money and how you use it. And it starts down a different path.
So thank you. We talked a little earlier about investing for the long term in these types of funds. Is there a way to invest in them where you're getting some cash flow back, a dividend, and that's individual stocks, I think, not necessarily a fund, or maybe I'm wrong. Help me understand that. Did I ask a question? If that makes sense?
Oh no, it makes sense.
Okay.
So most of the vast majority of the types of investments that are available are going to be like equity mutual funds, right? And they're not. Very few of them are dividend oriented. Right? Okay. So they're not necessarily income producers. Their real gain is capital growth over the long term.
Okay.
There are bond funds that do provide everyday income. Basically, they're similar in that they're investing in corporate bonds rather than corporate stocks, right? Okay. So they try to apply the same kind of rules about, ESG analysis to the bond fund. There are fewer of those yet because the bond market, you could say that the bond market in general is more conservative and they tend to be a little slower to adopt new practices than the equity world does, right? Okay. So, but they do exist out there.
Okay.
I would also point out that if you wanted to explore different options. There are organizations like Harvard Impact, Lend, Donate, and CDFIs like Raise Green. They are organizations that pool money together from investors, lend it to local organizations that have an impact project. Mm-hmm. And then when that organization pays that loan back, you as an investor get a return. And that return can be anywhere from 4 to 10%. There's pretty good options there. But again, that's a little bit, you need to understand things a little bit more in order to take advantage of those opportunities because they are different in terms of the ways.
Got it. Ben, were you going to say something? You look like you were.
I was, but it got covered.
So what I'm getting is that this type of investing, especially to the folks that I talk to about cash flow investing, and we talk about investing in real estate and businesses that do have a positive social impact, or what the sponsor is doing with that real estate is going to have a positive social impact. And for cash flow, this investing is a different bucket. This is more of like we're talking about the longer term capital gains or capital. Did you say capital gains? I want to make sure I'm saying the right word. Capital growth, where you're not necessarily getting the cash flow on a monthly, yearly basis, but over time, you're then going to sell that fund, sell the stocks in that fund, sell that so that you get the money out of that into your.
This is the nest egg, right? This is how you're treating your nest egg.
Got it. Makes sense. You guys, this has been really good. I feel like in a lot of things, the what I know box is really small and the what I don't know box is really big, of course. What did I not ask you, or what should the folks know that like I just don't know to ask you?
There are a lot of people who are very upset about ESG investing because it is very quickly and easily labeled as woke. It is very quickly, I'm going to narrate your eye roll for your audience so that everyone can see or hear what you did, which was appropriate. There was a significant eye roll. It was appropriate. And there's also just a lot of pushback from traditional investment folks. A lot of financial advisors are like, oh no, this is a money loser, right? A lot of people who want to do this get pushback from their advisors. Don't let them push you around, right? This is something that is important and should be important to you. And if you're getting pushback, read our book, talk to us, go read online, educate yourself, right? For so long, you've been told, put your money in your retirement account and don't look at it, don't think about it, pretend it's not there. Take some ownership. Right? Take some ownership, look at it, think about it, consider it. How do you feel about it? Maybe you can feel better about it. That's what we're hoping you're going to do.
You're preaching this. This is the stuff I preach. Do not put your money in a suitcase and hand it to a guy or a hand that's coming around the corner and you never know to it again. You look at it and just like you said, take ownership of it, understand. Even you guys, if it's your money, that's your long-term money, you do want to know what's happening to it. What are you doing? What is your money doing out in the world? Making it a better place or not? And it's an important thing. And I think most of us care. Just don't think we can have it's like, that's just not something I can control. I think Ben just said it is something you can control. And it takes a little bit of work, finding the right fund manager, finding the right people to make sure they're investing your money the way you want your money invested.
And it's worth it. It's worth that work because you're going to feel better at the end of the day.
Yeah. And all the studies show there's no financial penalty associated with this. This is another important thing. There's been, those advisors that don't really like to talk very much about, they don't like to be all that responsive. And I could talk at some length about advisors and the guys that you hand suitcases of money to. Anyway, I don't want to get too sidetracked on that, but I'm with you. But a lot of those guys, they will literally say that because they just don't want to deal with it. They don't want to think about it. They don't want to put the work into figuring it out for you. They don't want to have to listen to those conversations. They're not comfortable with it, right? And it's so they've tried to kind of push the whole thing off by saying, oh, that's charities. That's not investing. It's not. That's just not true. All of the data suggests that investments that are done with a sustainability approach perform as well as or better than traditional investments over time. So there's no penalty to doing it. And so it's not just a feel-good thing. It's a feel-good thing, and it's a long-term wealth builder.
To me, what you were saying is the folks that tap you on the head and say, "Don't worry, honey, I'll take care of it for you." That that is what is happening when they're telling you you can't do that. It doesn't work that way. I'll take care of this for you, honey.
That's exactly right.
Every single one of you out there should have got angry about that. So don't let it happen.
I have to share this story really briefly. I was at a conference a few years ago. So this was a few years back, and it was about sustainable investing. And there was an advisor in the audience there was a woman up top who was an expert in sustainable investing strategies, explaining to advisors in the audience here's how these strategies work and how you might want to. And at the very end, this crotchety older gentleman went up to this woman and said, "Well, I don't like any of this stuff, but people keep asking me for it. So I guess, what do I got to do for this?" I mean, he was just so, even as he was talking to this proponent and showing an interest in, he still had to make sure everybody knows that he didn't want to do it and he really hated it and whatever.
It's one of those things that the more we push to have it in our portfolio, the more the advisors will have to learn. And when your advisor tells you something that just doesn't make sense, like this isn't going to make you any money, just know that doesn't make sense, number one. Mm-hmm. Number two, it's time to find somebody else. It's like going to a doctor who tells you there's nothing you can do about your high blood pressure. You just got to deal with it. You're going to have a stroke. And come on. We know that that's not true. You go find some doctor who can help you.
Yep.
Same exact thing with your money, with your investing. You want somebody that can help you so that you can make the decision that is best for you. All right, you guys, I could go on a lot more with this, but let's talk about your book. How can people get on the waiting list for it? You said it's coming out in October. I think this is an important book for all of us who want to understand how to invest more sustainably and in a more socially responsible way, and how we can find the right people to help us to do that.
It's on Amazon as of this week. You can pre-order it on Amazon. Probably a number of other retailers as well. I think Barnes & Noble as well. But you can go to tillinvestors.com. We'll have all the information about it there as well. We're not going to be shy. You'll find us if you're looking for us.
It's called Sustainable Investors :
Investing.
Sustainable Investing : an ESG starter kit for everyday investors. And, the plug that I would put into it is that we've put a lot of thought into how do we make this clear? How do we make this short? How do we provide examples? How do we make it as easy to absorb as possible? It's very easy to get caught up in all the technical investing language. We try our very, very best to dispense with all of that and just clear the path so that you can find things that relate to you and make your choice.
I love it. So I know that not very many of you out there are sitting down with a pen, taking notes as we had the conversation. So everything about how to find that book and how to find Kyle and Ben will be in the show notes. Make sure you take a look and click and find out how you can be more responsible with your investing, your long-term investing, so that you are making the world a better place with your money from now until the end of time. I really appreciate it. Thank you guys so much for being here. Until next time. All right.
You've been listening to Money with Mission. There are projects happening right now where you can have a great financial return while positively affecting the lives of others. To learn more about our opportunities, go to moneywithmission.com.
Thank you.